Let's get to some economic news this morning. As economists predicted, inflation ticked up slightly year over year in October. The consumer price index rose 0.2% last month. It is one of the key inflation gauges monitored by the Federal Reserve. The price of housing and food also both increase. So CBS News MoneyWatch correspondent Kelly O'Grady is joining me here in Studio 55 to talk about what the numbers mean and potentially, Kelly, an interest rate cut. What do you think?
So this is where it gets a little hairy, right? I want to just kind of level set expectations. We were expecting 2.6%. It is higher. It's not cause for panic. It's cause for concern. Right. We don't like to see this move up, but this is not like we've seen it happen month over month over month. This is the first time that it's actually moved up in a while. Right now, the market is pricing in an 82% chance of a quarter point cut come the next Fed meeting in December.
Odds.
Right. So it's not 100%, but we're leaning that way. What I want to emphasize, though, is this kind of is the first piece of data that the Fed is going to get. We're going to get another CPI report before that meeting, which could impact things, another PPI report. Just to kind of give you a little bit of flavor, the reason why this is up is shelter. Okay, so shelter costs have been rising. They're really sticky. Energy costs came down. That's good. But something I know you and I talk about all the time is why don't people feel the fact that inflation is coming down? The good news in this report is that real wages, so that's inflation adjusted, actually increased 1.4%. So what that means is it might not feel it right now for you at home, but your wages are actually growing faster than inflation. That's something we like to see.
Yeah, because part of the argument that Democrats made during this last election is that the economic data was good and that people just had to hold tight so that wages could catch up to inflation and even surpass it. It is only starting to happen now. And it's hard for people to understand. You can show them all sorts of data and you can put up fancy graphics on the screen. But when they come home and they say, look, the price of milk cost way more than it did 4 years ago. The price of eggs, the price of gasoline, the price to heat my home cost way more than it did 4 years ago. It's a hard argument to go against when you're just showing economic data numbers.
Absolutely. And that's why I always like to say, like, look, I get it. I'm not feeling it at home either.
Right.
And so the data is there, but it's going to take a while for that to flow through. And that's why you saw voters say, like, look, I'm just not feeling it.
One of the things that people always ask me as well, Kelly, is, well, how come interest rates for the cost of homes has not come down, the 30-year fixed? And it's hard for people to understand. They say, well, all the economic data points to good things. The Fed is cutting, and yet it feels like interest rates are even higher than they were 6 months ago.
Okay, so this is all because of inflation. So mortgage rates actually did come down before the Fed cut rates because mortgage rates are tied to the 10-year Treasury. And what that measures is where investors think inflation and the economy is going. So before the Fed cut rates, there was all this messaging that the Fed's going to cut rates. So you started to see mortgage rates come down starting in July for a couple of months. Then that rate cut that we got, the last two, was already priced in. And so now some of the economic data, including today's, has shown that inflation is going to be a little bit of a bumpy road. It's actually going up. And that's why you're seeing mortgage rates go up now. I think it's the past 6 or 7 weeks we've seen them tick up. Yeah. So until we see that inflation data coming down, again, more over time, and that the Fed continues to cut rates, and we think they're going to continue to cut rates, mortgage rates are going to stay where they are.
Okay, what numbers could we potentially see tomorrow? Thursday is always a big day on the economic calendar.
So we're going to get the producer price index, and that's really important because those are the prices producers are making. And guess who they pass that on to, Vlad?
Consumers.
Us.
Yeah.
So it's an early indication of what you could see down the line in the next inflation report. Economists are mixed, but they're thinking we could see a little bit of an uptick, which again is not what the Fed wants to see. But like I said, we're not panicking yet. We're concerned.
I'm going to want to talk to you over the next couple of weeks, especially as we get to the inauguration and to the next Trump administration, about some of the economic policies that the president-elect has talked about implementing, which some economists say might not be good for the U.S. economy, even though people voted for him because they thought that he could, quote unquote, fix the economy. So it'll be a really interesting discussion to have over the next couple of weeks. Love having you here in the studio, Kelly. As always, market likes what you're saying. Look, it's already up 48 big points. Means nothing, folks. All right. Thank you, Kelly. Appreciate you as always.